When I'm reviewing my clients' self-managed superannuation funds at the moment, one thing that I'm doing is looking at how much cash they've got and how many years worth of pension payment coverage have they got into the future. So given the share markets are at all-time highs, the results and returns we've seen the last particularly 2 years have been absolutely exceptional. We're making sure we've got a good runway of conservative assets, and this means we might be taking a bit of profit here or there off some of the better performing businesses that we've owned where they've grown substantially and are starting to overtake a bit of the portfolio. So this is where we're just selling down parts of businesses that we value and that have been fantastic, and we still want to hold, but we just want to build up those cash reserves. And I'm going to show you my calculator that I made very quickly, and you can replicate this very easily yourself. So you can see here, this is just my self-managed superannuation fund pension funding calculator. It's not terribly complex. So let me run through it, putting in my clients' income needs here at the top, less their estimated income, and obviously taking into account fees, which would be advice fees, and also accounting, return and audits, leaving net income coming in, which shows there's going to be a bit of a shortfall in terms of, there's 45 grand that we've got to find from the fund each year. Now, if they have conservative assets of 350, I'm talking about government bonds, I'm talking about term deposits and just their Macquarie cash accounts, including the Macquarie Accelerator where you get 3.9%. So if we divide this amount through that, it gives us 7.8 years. So essentially they've got all this years, nearly 8 years ahead of them, and they will never be in a position to where we sell at an inappropriate time. And the last thing we want to do when we're funding pensions in the future is having to sell down to meet the minimum pension requirements. Of course, people need to live. It's not just about meeting the minimum, it's about meeting their income needs so people can go out and have lots of fun. So it's making sure that for the next, in this scenario, nearly 7 years worth of conservative assets, including the income that comes each year, is there to support their pension and allows them to not worry about their money and go and do fun stuff. Please remember this is general advice only, but thank you for listening. Cheers.